Hello, testing. Hi, Atithi, how are you? Your mic is muted. Let me try to get that off for a second. Hold on.
Can you hear me?
Yes, I can. Perfect. Awesome.
How are you?
Good. How are you?
I'm doing good. I'm doing good.
All right. So we have our resident attack expert here that's going to be shedding some light on capital gains taxes and stuff like that. So I hope you guys are ready and prepared. We do have a very good upcoming class. We would definitely want to thank Atithi for coming on and, basically sharing her knowledge with us. Wait, I don't even know if you guys can see me or not, right? So give me a second. There you go.
Yeah.
Just all over the place. Cool. Let me just change the camera around. Oh, perfect. So, yeah, awesome. So let me try. Are you going to do a screen presentation? How would you want to do it?
Yeah, I'm going to be doing a screen presentation. So,
okay, cool. So what I'm going to do is just let's wait around for a few minutes, right?
Yeah, of course.
Right, and get to know each other and basically. So, Atithi over here is a local, right, to New York, from what I believe?
I'm from New York. I'm residing in Brooklyn.
Awesome, nice. So tell us about yourself a little bit.
So just a little background about myself. I started doing taxes in 2013, I believe. I was in college at that time, and I got to become a program coordinator of this VITA program. A lot of CUNY colleges do it. It helps with low income tax people and elderlies. And from there, I just was very fascinated about taxes. About 4 years ago, I started my own tax business called Think Tax. So I've been successfully doing taxes since then as well. I also, after college, started teaching tax at York College to adults. And I
Nice.
did that for a good 2 to 3 years, both beginners classes, advanced classes, and as well as preparing the students to take the enrolled agent exam through the IRS. And I'm also a full-time worker. I'm an assistant controller at a company called Tuscany. So over there, I take care of 30 different financials for different industries, varying from medical supply companies, nursing homes, promotional like boxing companies, lots of real estate. So I have a lot of exposure in a lot of different companies.
Okay, wow. So you are basically, you do have a lot of experience in this space. Okay, great. That's
Correct.
perfect.
Both in
Um,
tax and as well as accounting itself. Yeah.
Okay, nice. Okay, so we are definitely going to be hopefully educated enough so we could basically make some informed decisions on how to basically go about what we're doing and what we've been experiencing in the past couple of weeks and especially the past couple of 1 month or so with
Yes,
all this stuff.
exactly. This last month has been crazy with all the gains that we all getting over here.
Yeah, I know. So that's basically it, and basically we want to be, informed about these things and basically make informed decisions, especially with all the stuff that's going on in the stock market, with the Wall Street bets and basically with crypto. And, we are a heavily, crypto centric
Mhm.
group. So we do have many registered users that are coming on, hopefully, right?
Yeah,
So if anything, we'll just wait a few more minutes.
yeah. Let's just wait a
And
couple minutes. And how about Wakar? How about you tell me a little about yourself? I haven't really gotten to.
okay, so basically, I got into the crypto space about what for 2000, late 2016, early 2017.
Okay.
I run a small digital marketing agency from from home, and the funny thing is, um, I never got into stocks, never got into stocks, right? So I've been playing with crypto for all this time. And then
Mhm,
basically, just the past, when the pandemic hit,
mhm.
and I saw the stock market diving, I was like, okay, you know what? You know, I think this is a good time to invest in the stock market.
Uh-huh.
So basically, that's exactly what I did. And now with all these gains and stuff like that, I was just like, hey, why don't we put a class together and basically teach the people, right? Because I was talking to my accountant earlier. He was just asking me, oh, what's going on? You got to send me these things. And I'm like, I'm waiting on it, and let's see what happens. So I just
Yeah,
want to make
for
informed
sure.
decisions and help the community make informed decisions about
Of course.
assets and, stuff like that.
It's very, very important. And it's like people need to be educated on this because they make sound decisions when they're actually trading at that point, right? Because there's a lot of tax law that people are not familiar with. And usually their accountants don't really go in depth with it. They're just like, hey, give me the paperwork and I'll get it done. But like nobody really understands the in depths of it. And I think it's very important for people to
Mhm.
do that.
Awesome. So we do have a couple of questions I think I forwarded to you prior to these things, right? We definitely want to get around to
Correct.
these
I actually
questions.
included them in my slides. So
Oh, perfect. Awesome.
yeah, great. Yeah. But yeah, I actually started doing stocks only after the whole COVID thing because I saw the stock market go down a lot and I decided to dabble into it. And I think I still got in a little late. I mean, late, it's never too late, but I think I got in like around August time. And I was introduced to your group in I think October, and it's helped a lot.
A
And
lot, right?
it's because of you guys that I actually got into crypto as well. I just actually got into crypto a month ago, and I think I got in the perfect time because now it's a huge bull run. So I've seen everything just like inflate like
Yeah,
crazy.
absolutely, right? Especially what we're trying to do is, for the community itself, bring awareness and education to the community,
Yeah.
and really, really appreciate you taking your time out of your, especially on Valentine's Day. I'm pretty sure you have some, you could have been other places instead of doing this thing today. So really
It's not
appreciate that. All right, so why don't we kick it off, right? And we'll start off, right? Just some ground rules, right? I'm going to hand over the screen presentation thing to you,
Okay.
right? And yeah, please, just standard ground rules is basically keep your mics muted. If you we're gonna keep it the same format that we did last time, I believe, right?
Okay.
And if you have a question or a concern within the presentation, just either unmute yourself for a quick second and definitely mute yourself back. We definitely don't want that much interruptions while the presentation is going on. Okay, cool. So with that being said, let me hand over the give me a second.
I have a hard, just a quick one. I might have to drop soon, so I was just wondering, would the recording be shared with the group?
It should be recorded and shared. Hopefully it will
Okay.
be it will be recorded and shared. Depending on how my computer almost blew up last time, so because it was like 4 hours long, and it just
Oh, okay.
yeah, so just like, I hope it doesn't freeze, but if we're all good with that, we should be fine.
Good. Thank you.
Not a problem. Okay, so
Would you like me to just share my screen?
yeah, I gotta make you, can
Oh,
you do that?
okay.
Yeah, I gotta make you a host
Yeah.
first, right? Yeah. You all right, so now if you're the host, right? If anybody pops in, you're gonna have to, basically accept them and
Oh,
I guess.
okay.
All
Yep,
right,
no
okay,
problem.
cool. Sounds
Yep,
good.
that sounds good.
And you are now host, so take it away.
Just give me 1 minute. I'm sorry.
Not a problem. Especially with all this new technology and work at home stuff, you saw the video with the cat and with the he's just like,
That was so funny.
that was hilarious.
I am not a cat. I'm ready to proceed.
Yep, that's the one.
Okay, is everybody having a good view of my screen as of now?
Yes.
Is this in the way for anybody? Like, do you guys see this part too, or
Part 2, I see.
do you guys see like the thumbnail of everybody or no? Just want to make sure it's not in the view of the presentation.
Okay, got it. I see.
I don't. I think you can change that. So I see your screen, and I see like the presenter talking.
Okay, so I'm just gonna minimize that so that I can put it towards the side. Okay, there you go, guys. Okay, so I already gave a little introduction about myself, but just very quickly, I have been in the tax field for at least the last 10 years doing taxes for many different individuals, also small businesses, medium-sized businesses. That's where majority of my focus is. I created my own company, Think Tax, about 4 years ago, and this is my 5th year about doing taxes. So today, the crypto group has sponsored this event for capital gains taxes. I'm sorry, this class, and I'm just gonna go, the knowledge that we're gonna gain here is basically being able to make sound decisions when you guys are making decisions on whether or not to sell a capital or buy a capital, and like just basically everything surrounding that. So to begin, in order for us to begin, I first need you guys all to take a good look at this 2020 tax bracket. What this shows right here is what your tax rate is going to be. So one of the #1 questions as an accountant that I get from even friends, family members, even my own clients is, what is my tax rate going to be if it's short term, right? And honestly, I don't know the answer to that. I can never tell you your particular tax rate because short-term gains are taxed at ordinary tax rates. What does that mean? That means that whatever you pay as your tax rate for your W-2 income is the same tax rate that you're going to be paying for your capital gains. So in order to continue this lesson, the first thing I want everybody to do is take a pen or a paper and just quickly just look at these 2020 tax brackets, whether you are a single filer, head of household, or married filers, and see which percentage of rate that you fall into. Now, you'll see that it says 0 to 9,875, continuing. The reason is that we believe in a progressive tax rate, so we do not believe in flat tax rate. There is no one in this country is going to be paying exactly 24% of $100,000. That's not how it works here. The way that we work is progressively. So 10% up to 9,875 will be taxed at 10%. But since capital gains is going to be increasing your personal income, you always want to look at the highest rate. So if somebody in this class right now has $100,000 income, you're going to note down on your piece of paper that your rate is 24%. So I'll give a minute just to do that really quickly.
So basically, it would be like it progresses. So the more money you make, the more taxes you pay, obviously, right?
Exactly.
Awesome.
For $100,000, you went 22%, right?
For well, 24%.
It depends if you're single or
Yeah.
married filing jointly.
Yeah. So take a
Got
look
it. Perfect. Thank you.
profile. And if you're doing married filing separately, that's all. Just follow the single filer's rate over here. Do you guys see my pointer? Just making sure.
Yeah, we see it.
Okay, perfect.
Okay, so for if someone is making 100K, so should we make an average of 10 plus 12 plus 22 divided by 3?
No, as of right now, all I want you guys to do is take the highest tax rate. So if you're making 100K and you're married filing jointly, your tax rate is 22%. So just put 22% on your piece of paper. Okay.
All right.
So moving forward. Okay. At the end of the year, you guys will be getting a lot of different tax forms, and it's a little confusing. You're like, what is this? But there's basically three main ones. There's a Schedule D, which is for capital gains and losses. There's a Form 8949, which is for sales and other dispositions of capital assets. And there's a 1099 DIV for dividends, okay? Basically, the Form 8949, it shows each and every single one of your buys and sells. Now, if you only bought in the year and you didn't sell that asset, it is not going to show on the 8949. It is only going to show the things that you have bought and sold. It also categorizes for you whether it's short-term or long-term. And then Schedule D takes all the information from 8949. It will add it all together and put it into Schedule D. So your accountant will need all three of these forms at the end of the year. Now, these forms tend to come out around February 15th, but because of everything, all the delays, I believe that they're not going to come out until March now. I believe some platforms have already started giving it, while others haven't. Just hold on one second. Okay, here we go. So you guys always have to watch out for these three tax forms. Okay. One good part about these tax forms is that because of these tax forms, you don't really have to do any work outside. Like you don't really have to keep track. I'm not saying it's not a good idea to keep track, because I feel like to become a good investor, it's very, very worth it to have an Excel sheet, seeing how much profits and losses you do have on a weekly basis and the percentage that you're making, right? So that you know where you are. So the next thing is short-term versus long-term. What's the difference, right? So like when we're in the group, we're always talking about, hey, yeah, we're gonna be holding this for long-term, right? The majority of us are not really talking about a whole entire year. We're talking about, okay, 3-4 months, like, and we're gonna sell it. But the IRS does not categorize that as a long-term, right? We like looking at the quick profits, but anything that is less than a year is going to be considered a short-term asset, okay? Anything that's above 365 days, so the 366th day will now categorize your capital gain as a long-term asset. The clock starts ticking the day after you buy the asset, and it's up to the date that you sell it. Okay, so it's very important. So now if you have a stock that you held for 365 days, I'm really hoping you hold it for that one extra day to get those long-term benefits, okay? Now, why is long-term capital gains something that people talk about more? Long-term capital gains are taxed at a more favorable rate, okay? That means that if you're making a certain amount of income, so like let's take a look. If you're single and you're making $39,000, and if you held an asset for over a year and you sold it, you're not paying anything in taxes, okay? But if you held that asset and it was a short-term gain, you're gonna be using your ordinary income tax rate, the same rate that you put down on your paper right now. That's the tax rate that you're gonna be paying on anything. So that's why it's majority of the time more advantageous to take long-term capital gains. Now, it really depends on the scenario. So we tend to also get into stocks that are parabolic, right? Where it could just drop in the next minute or maybe an hour or something of that sort. Obviously, at that point, it might be more favorable just to take that short-term gain, right? But there is other stocks where we really believe in, like NIO, like all these EV companies, where you believe that it's going to go higher. So you might want to keep some for a long-term purposes so that you can be paying less taxes at the end of the year. Okay, now one of the biggest questions that I receive is, am I getting taxed on every single transaction I am making? Okay, is it going to be as soon as I sell an asset, I'm paying taxes on it? Or is it going to be the whole, at the end of the year, if I made $20,000, am I getting taxed on that $20,000, or am I going to get taxed on my whole entire? So there's a lot of different misinformation about this. And basically how we figure out how capital gains works is you first take all your short-term assets and you take your long-term assets, right? You separate the two. Whatever your short-term capital gain is, you'll take that and you'll minus that out of your short-term capital losses. The IRS sees all these losses and they let you subtract it from your gains. So for example, if you have $1,000 in gains and you have $900 in losses, you'll only be paying $100 in short-term taxable and short-term tax, okay? And the same thing goes for long-term. So you will take everything that's categorized in long-term and you minus it out of your long-term capital loss, and that's equals to your long-term taxable amounts. This all, by the way, is categorized in your 8949 that you do receive at the end of the year. So it is not something that you yourself need to figure out. You do get a tax form for it, but it's very important to understand what these tax forms show. Then there's something else. We get a credit. Now, if in excess of your short-term, I'm sorry, one second. If in excess of your short-term and your long-term, there's a loss, right? You're able to use 3,000 of that and deduct it from your ordinary income. Now, what exactly does that mean, right? Because I keep saying all these words. Ordinary income is any type of W-2 income. If you have 1099s, if you have your small businesses, and you have Schedule Cs, whatever your income is, not related to capital gains or anything of that sort, you're able to deduct $3,000, okay? So if your income is $100,000 and you had $15,000 of losses, you're able to take one of those $3,000 of the $15,000 and deduct it, okay? Which makes your taxable rate, well, not in this case, because 97,000 and 100,000 is pretty much in the same tax bracket, but if you're in a different tax bracket, it makes sense. But either way, you're saving $3,000 in taxes. And then the rest of it gets carried forward to future years. I actually think I have a slide on this. Let me just, yeah, so there we go. So the capital loss carryover. So you take your short-term capital gains and it offsets with your long-term capital gains. And then you get the $3,000 capital loss deduction. Again, like I mentioned, anything that's in excess of the $3,000 would be carried forward indefinitely. Now, you always have to remember that the carry forward is going to stay in its respective terms, whether it's a short term or a long term, okay? That means that if you had $5,000 of short-term capital gains and $2,000 of long-term capital gains, losses. I'm going to repeat that. If you had $5,000 of short-term capital losses and you had $2,000 of long-term capital losses, what the IRS is saying is on that particular year, you're going to first use the $3,000 from your short-term capital losses and carry the rest forward, meaning the $2,000 in capital losses is going to be short-term, and then the rest of it is going to be long-term.
Awesome. I got a quick question, right?
Yes.
Does anybody have a question? Because I know there's a lot of information right there. So if you guys do have any questions, just unmute your mic and go right ahead.
Yes, for sure.
So carryover mean like move forward to the next year?
Yes, correct. So basically you would be able to carry forward that amount. So whatever, like $7,000 is left, you'll be able to move that over to the next year and use another $3,000 against your ordinary income the next year.
Thanks.
No problem. This is just an example very quickly. STCL is short-term capital losses and LTCL is long-term capital losses. So as I was mentioning before, if you add these two up, now you have $10,000 in losses. You're going to be using the $3,000 on this year's tax return, okay? And then the $7,000 is going to be carried forward to the next year. And we have to continue using whether it's short-term or capital, short-term or long-term. So we use $3,000 of the $4,000. So we only carrying forward $1,000 of short-term capital loss and $6,000 in long-term capital loss. Anybody have any questions on capital loss carryover and what you're taxed on?
I have a
Okay, so
question.
great.
Yes.
In this example, you use the 3,000 against the short-term losses first. Is that just because it's preferable because we want to get rid of short-term losses first, or can we use it in either category?
No, the IRS specifically states that you need to use it for short-term capital loss first. You have to get rid of those and then move on to long-term.
Okay, thank you.
That was exactly my
Oh, really?
question. Yes. Awesome. Great.
Okay. Any other questions before I move on? Okay, great. Now, this is just a little example of how patience can really pay off in lower tax rates, all right? And again, this is all based on what you want to do at the end of the day. This is not me telling you that long-term is definitely better than short-term, but this is a scenario if it was a married couple earning 100K a year, okay? They bought 100 shares at $20, $2,000 right there. And they sold it at 100 shares for $50. They made $5,000. So the capital gain of this is $3,000. Now, if you look over here, this is how much it is $450 in taxes at 15%. And then over here, it's $720 in taxes at 24% because it was short term. Okay, so the profits after taxes, what the difference between the two are. Now, you also need to remember sometimes, just from what I've noticed in the stock market, is if you're making $3,000 in capital gain in short term, right, you can actually be making a lot more in long term if you're invested in a stock that you have a lot of faith in or you know that is going to grow. So your short-term capital gain at this time might have been just 3,000, but in a long-term purposes, if you held it for another year, it might have actually been close to 15,000, right? Because compound rates are way better than doing these short-term things. Again, not saying that short-term does not work. I myself do a lot of short-term day trading. I am a big fan of short-term, but I also do have long-term. I do believe that everybody should be taking advantage of both.
Right. And in the group, we also mentioned that you got to diversify your assets and classes, right? Both assets and classes. So if you wanted a short term, I would consider that a class, basically for what you're doing. And basically you just, keep records and go do it like, you have to have different strategies as you say.
Yes. One thing that I realized, like, again, I haven't been doing stocks for a long period of time, but I've gotten a lot of knowledge and been reading a lot about this stuff. And if you have a strategy of what you're planning on doing, whether it's short-term, long-term, day trading, whatever it is that you're planning on doing, as long as you know what your strategy is, you will be able to be successful. And why do I say this? Because like just in the group, I see a lot of people always asking like, oh, what price would this go up to? Or like, when should I take out? Or like, following. Oh, I'm not saying there's anything wrong with following, but just not knowing what you're in it for, right? So like if somebody in the group is mentioning a stock, and Vigar, you can stop me if you want, but like, I believe that, yeah, you can do your own research on it and see where it fits best for you. Is it a long-term thing for you? Or is it a short-term thing where if you make $100, you're going to walk away and you're going to be fine with it, right? So it really, honestly, it really depends on your scenario and what you are willing to risk and how much you want to pay in taxes at the end of the year. Okay, so moving forward, dividends. This is something that everybody loves. We kind of do mention it a lot in the group. We always have like posts of letting us know. So dividends, basically, for people that don't know, companies give out dividends for the amount of shares that you have with the company. Now, there's a lot of companies that do really good dividends. Like one of my favorites is NRZ. It's a real estate type of company, and they give 50 cents per share. It's a really good amount. So does Exxon. Exxon has really, really good dividends and stuff like that. Now, dividends are also taxable, and there's different types of dividends. There's a qualified dividend, and then there's an ordinary dividend. Now, a lot of people, what they do is that they decide to get into a dividend about a week ahead of time. And they're like, okay, yes, I passed the X dividend date. I'm going to get the dividends of 50 cents per share. I'm going to make really good money, and I'm going to sell right after I get my, right after it's recorded, right? Great technique, obviously easy money. We all love it, right? But there's consequences for that. What's the consequences? You're paying higher tax rates, okay? The tax rate that you're paying in the scenario that I just gave is basically going to be your regular tax rate, your ordinary tax rate that you wrote down on that piece of paper. Now comes qualified dividends, right? Qualified dividends are taxed at a long-term tax rate, okay? And it doesn't mean that you held this stock for a whole entire year or anything like that. No. There's two requirements for it, okay? First, the dividend needs to be paid by the US corporation, and it needs to be in one of our major US stock exchanges, okay? And the second thing is that it needs to be owned, that stock needs to be owned for more than 60 days within a 121-day holding period. Now, if we look over here, the ex-dividend date is usually when the dividend is basically stating that, okay, this company is paying out the stock, right? The dividend. So that's the date. You could be holding that stock 60 days before or 60 days after. In this whole entire period, it should be for 121 days, okay? That's for common stocks, right? Common stocks are the things that we tend to deal with on a day-to-day basis. Then there's something called preferred stocks. They're more like bonds. I don't really think a lot of people deal with them on a day-to-day basis, but we can go more into that. The only difference is that that's 90 days before and 90 days after, because usually the dividends for preferred stocks are much higher, and preferred stocks are basically paid out before the common stocks are paid out. That's the whole difference between the two. Any questions on dividends and distributions?
Oh, on that note, there, because obviously I'm in the crypto space. There are some assets in the crypto area where you can stake or you get dividends or airdrops, as they say, right? But the thing is that you must be holding it the day of the shot. It's called the screenshot in our aspect, right? In our field is basically they take a screenshot of if you're holding it at this time, right? And depending on how much you're holding, that's what you will get. So I just wanted to also clarify that for the crypto people as well.
Perfect. Thank you, Rukar.
Yep.
Okay. So now this is something that a lot of people do not talk about. It's wash sale, right? I'm sure a lot of you guys have not heard about this, but this is where the IRS comes in and says, no, I'm not going to let you take that loss. Now, we all know that losses are very adventurous to take, especially since we make a lot of gains, right? So what is wash sale? So basically, the wash sale rule states that the tax loss will be disallowed if you buy the same stock, whether it's a contract option or the same exact stock, within 30 days before or after the date you sell for a loss, okay? So today I sell, actually, I think I have an example. Perfect. It goes hand in hand. I'm just gonna read the example. Jay purchased 100 shares of CCIV for 30 per share. He sold them for 27 per share on July 20th. Then he repurchased the 100 shares on August 10th when the shares were trading at $33 per share. Now, this transaction occurred within the 30-day wash sale period. What does this mean? This means that a $300 loss is called a wash sale, and it will be disallowed by the IRS. The IRS will not let you take the loss. But what the IRS says is that I will let you take that $300 and adjust your basis for these new shares that you bought, these $33 per shares. I'll let you adjust the basis by $300. So what does that help you with? That helps you that in the future, when you do decide to sell the stock, your basis is higher, meaning that whatever you sell it for, you'll have less of a gain. Pretty much, that's what the whole background is. Now, the IRS does get a little tricky on this, and they also do state that if you sell it and you buy it on your spouse's account, during that restricted time period, they still consider that a wash sale. Okay, so please be very careful about that. Even if you buy it on a tax advantaged account, like a 401k or something, or IRAs and stuff like that, and you had sold it on like one of your basic like non-tax advantage accounts, that's still considered a wash sale. You're just not allowed to do it. You have to, sorry, one second. You have to be part of, you can't, I apologize. What I'm trying to say is that you can't use it on any other accounts either. It could only, you would have to wait in that 61-day window period prior to rebuying the stock. Okay.
There was a question going back to the dividends and stuff like that. I'm sorry, I just noticed it right now. They asked about how about taxes on staking in crypto, and would staking fall under dividends? I know crypto is relatively new, but the thing is that this stuff is coming up a lot of questions, right?
Can you just describe to me what staking is?
Staking is basically you're putting your money. I mean, you're putting your asset on the line, right? And they're giving you a percentage every day, or like let's say it's like they call it a staking reward, right? So basically, for example, Algo, I believe, if I'm not wrong, gives you a 6% yearly return, APY, right? That's what they give you if you basically stake your coin, and they make more coin off your coin.
Yes. So that would be taxable.
That would be taxable. Okay.
Correct.
This one.
I wonder if that's considered interest Islamically. Sorry to interrupt, but before we just switch topics.
I don't think it would be exactly. I don't think it would be really considered dividends. I would consider it more as an interest, but any type of income that you make in that sense is a taxable income.
Okay, so but on that note, definitely wanted to clarify that, you know, their staking is basically they are trying to promote their infrastructure by using your staked coin. So I'm not a scholar and stuff like that on that note, right? But there are some differences, right? I think you know, the best person, I believe, to clarify your questions at her was probably a Joe Bradford or somebody like that, or somebody along the lines that knows that terminology and technology as well.
Yeah, that's a good point. Thanks.
No problem.
Yeah.
I could also look more into it. Let me see if I can find something about it. I also work with a lot of different.
Just to add to it, staking is also basically they are giving you the percentage of mining. You know, they are mining the
Correct.
coins.
Correct.
So they, instead of you mine yourself, burn your electricity, they say, okay, we are using your money to mine, and we will give you some percentage. So I think it's not interest. It's
Yeah, it's like I said, there's a fine line and stuff like that. Obviously, we just have to, you know, have somebody who's knowledgeable in this, especially in this relatively new space, right? That basically does that. But you know, this is something new, and everybody's going about it. You know, everybody's just saying stuff that we don't even know what's going on right now. So this is something new, staking, and then that, from what I think it was called, it was a snapshot, not a screenshot. If you have that in your thing, then you'll those airdrops or your dividends and stuff like that.
Okay. I'll definitely take note of it and see what information I can find. So just in general too, like with crypto, IRS, it took them a while to finally like get into the whole play of it, putting it on our tax returns, getting taxed on it. So like, if it's that brand new, there might still not actually be exact laws about it. But again, I will check it out and see what I can gather, and definitely get back to you guys about this.
Cool.
Do you guys have any questions on wash sales?
Wash sales. No.
Okay. How do you avoid wash sales? One way to avoid a wash sale, like if you're really into that industry or you really want to be part of that stock, but because you do not want to take away from that disadvantage IRS law, you can go ahead and expose yourself to ETFs or mutual funds that also have that stock part of it. That is one way. Okay, now what this group is mostly about is cryptocurrency. Okay, so a lot of what I just went over with like how capital gains and losses are taxed and stuff like that, that also falls right into cryptocurrency. It's not like it's taxed differently or anything like that. It's just that you guys don't get the same forms. Okay, it's not developed enough for you guys to get the same forms. But a lot of my clients, they freak out because they get this form called 1099K in the mail, and they come to me and they're like, Atithi, I don't know, there's just so much money on this. Am I paying taxes on $100,000, $200,000, whatever, blah, blah, blah. And that's when I calm them down. What the 1099K is, it's just showing you the total value of crypto that you had bought, sold, or traded on that specific exchange, okay? And these 1099Ks actually only started coming out in 2018. I think Coinbase was the first one that started doing it, if I'm not wrong. That's where my client had brought into me. But prior to that, they didn't really have a 1099K. Now, to remember, the 1099K does not represent your total gains or losses. So please do not freak out when you see that. It's perfectly fine and it happens. But when will you get a 1099K in the mail? You'll only get it if you had more than 200 transactions and or you did more than $20,000 in cumulative transaction volume. Okay, I know a lot of us over here, we do scalping and like, you know, we do on day-to-day basis and stuff like that. So if you're doing more than 200 transactions in a whole entire year, expect to get this 1099K. Okay, this 1099K also gets sent to the IRS. So the form is, so this basically just tells the IRS that, hey, this person is doing crypto, but the IRS knows that that amount on the 1099K is not your capital gains or your capital losses. Okay. Now, how do you know what your capital gains and capital losses are? The best way to do it is record keeping. Okay. We had Nomi just recently show us a Post-it note saying that he record keeps his things on a Post-it note. Now, if you want to drive your accountant crazy, that's a great way to do it. But I would suggest you guys to use a couple of different things. You guys can use a manual Excel sheet where you guys basically input the amount that you bought, the price that you bought it in, sold, et cetera, on a day-to-day basis. This is a very time-consuming thing. That brings me to my second point. It's a website called cointracking.info. Now, coin tracking, actually, I'm gonna see if I can show you guys. So this is what the website looks like. It's an amazing website. People don't only use it for tax purposes, they just do it for reporting to see where they are in their crypto world. Because as you guys know, Coinbase and Coinbase Pro and all these ones that we use don't really show us exactly what we want to see on a day-to-day basis. So coin tracking is a great website. They do have a tax report. Now, the tax report that they will do for you is called the Form 8949, which we discussed previously. It will actually come and list you with every single transaction that you have done throughout the year. So if you are heavily on crypto and you're doing this on a day-to-day base and you keep buying and selling, I do suggest that you guys invest in coin tracking. I believe it's pretty cheap. I don't know the exact price, but definitely a great software to have. And it gives all the different other types of reports that you want. It's not only for tax purposes. There's a lot that can go wrong with crypto record keeping. So that's why I think that if it's less manual and more automated, it'll be better for you guys.
Right, and there's a couple of different ones. The coin tracking is one of them, and then I think I just came across another one that integrates with your wallet. And basically, if it integrates with your wallet, they'll know exactly how many transactions you're making, and how and what the basically how you're doing with that. So
Exactly.
keep you track with that as well. So we'll drop that information if you're in the chat of in the WhatsApp group. I'll drop it there, and then if we come across it. But I've been using coin tracking as well and Blockfolio for manual entries. You could also use one of those. Whatever is easier for you.
Coin tracking is not really manual, right? Like you're able to log onto your Coinbase Pro and stuff like that, and they'll take all the information and make an 8949. That's the way that my clients. Okay.
Okay.
And our next last one is contact your crypto exchange. This will take forever, by the way. It is not an easy way to do it. Basically, if you contact them, they'll send you an Excel sheet of everything that you've done throughout the year. People have waited months for this. So it's honestly the last thing on my list. I think you guys should either stick to the manual Excel sheet if you're not heavily based on it, or the coin tracking itself. Okay, so before we start our question and answer seminar, I'm just going to, there's a couple of questions that Vigar had sent over to me, and I'm just going to go through it really quickly. The one is, will the IRS filing tax bracket for crypto be the same as regular stock tax filing or different? It is exactly the same, whether it is ordinary or it has the long-term benefits, it is exactly the same between the two. The second is there any limit of crypto transactions per month set by the IRS, or is it unlimited? There is no limit. It is unlimited. You can do as much as you want. But if you do not want to receive a 1099K at the end of the year, you might want to stay below the 200 transactions. But there is no limit.
Okay, so there's just to clarify that, there's another question in the chat that says under 20,000 in transaction or 200 transactions, don't worry about the crypto tax. That's what, or did I misunderstand? I'm assuming you probably misunderstood. You have to worry about the tax, but I think it's what you call it. I think it's from Hasib, if you don't mind unmuting your mic and asking the question directly, that would be better. So you could probably transfer that, relate it better. So
Yeah, sorry about that. Yeah, so I just wanted to clarify that statement because I probably missed a small part of it, but it sounded like you get a 1099K if you had 200 plus transactions and or $20,000. So if you had under that, is there a different form that they send you, or is that just your own manually, your own manual way of keeping track of it and paying your taxes on that?
Okay, yeah, so anything under that is a manual thing. You won't receive a 1099K in the mail. You won't receive any type of tax documents from any of the exchanges that you do use, but the IRS is expecting you to manually let them know how much you had gains and losses.
So honor system?
I'm sorry?
Honor system, they just trust you to do that, or is there like a
Yeah, they actually trust you to do that. So there's a question, like in majority of tax preparer softwares, there's a question that we have to, it's mandatory for us to ask our clients is, do you do anything in the crypto world or exchange, et cetera, et cetera? And then the client has to answer yes or no. If they answer yes, there's follow-up questions and there's a form that we as a tax preparer have to fill out. So majority of your accountants should be asking this question to you guys.
So thanks for that. So even though we receive 1099K, so it doesn't matter, right? I mean, if I gain $100 or 100K, right?
Mm-hmm.
It doesn't matter. A 1099K is just a document.
Correct. Yes, it really doesn't matter. So the 1099K, right? You could have received it and you could have literally not made any sale whatsoever. You guys might have just bought things, right? Or traded, blah, blah, blah. You could have not had any capital gains or capital losses. You might have just zeroed out, net zero. You will still receive that 1099K, but you won't have any taxes to pay. Does that make sense?
So basically, yes, it makes sense. So what, unless you make 200 plus transactions in a yearly, I guess, right, in a format.
Correct. Yearly.
Yearly, or $20,000 plus or plus minus in that year, right? Then you wouldn't get a 1099, right? If you made anything below those.
Correct. Yes.
Awesome. So
that's fine, but even we make more than 200K, but it doesn't matter, right? It's just a document. For the tax purpose, we will be using either crypto tracking or manually entering for the tax deductions or reporting purposes. It's just a document to have it, to know that we did more transaction, right? So it is not affecting adversely for our taxes, or it is not alerting the IRS that we are doing so many transactions, right? It's just a document. I mean, that's my point.
No, that document is being sent to the IRS.
Yeah, it will be sent to the IRS. So we need to report whatever we like loss or gain based on from that Coinbase or any wallet, right?
Correct. Yes.
It needs to be matched. Whatever we will be sending to the IRS using CoinTracker, this should match to the 1099K if we have any.
It actually won't match the 1099K. So let me just explain it one more time. The 1099K is your total value of the crypto world, whether you bought, sold, or traded, right? So that 1099K I've seen people have like up to $1 million on that 1099K, right? But when I actually did their capital gains and losses on the form 8949, it was like only $10,000. So again, it's not going to match exactly. The number that's showing on the 1099K is all the transactions calculated together, not your capital gains and losses. So they're not going to be matching your capital gains and losses to the 1099K number.
It's more like a volume, okay, just a volume.
Correct. Volume.
So from what I'm understanding is basically it's a document that is giving you all your transactions, right? Not your, your losses or gains. Is basically a document that's giving you all your transactions, and then you have to basically give it to your accountant, and that same document is transferred over to the IRS as well if you are above these prerequisites, basically.
Correct.
Correct?
So just for you guys to be familiar with the form itself, let me just show it to you. Can you guys see this? So the 1099K, it's not really going to go in detail about all your crypto. So 1099K, before it started coming into the crypto world, was basically for payments like merchant services and stuff like that. So like if you use Square or like any other types of merchant, I can't really think of any right now. If you use any of those and you had transactions over a certain amount, that company, that merchant will go ahead and send you your 1099K. It's just for payments, third-party network transactions, right? So to Vikar's point, it's not really going to show you exactly every single transaction that you did. It's going to show you the number of payment transactions that you had. So the number will be here, whether if it's over 200 transactions, and it'll just give you a gross amount here. That's basically what it's going to fill out for you. And then it is up to you to make that 8949, which is showing each one of the transactions that you had on a day-to-day basis. So again, that's why we mentioned getting that website for coin tracking, which will help you generate an 8949, which will show you each and every single one of your transactions.
Hey, sorry, I have one question about coin tracking.
Yes.
So if like, let's say you didn't have it the whole year and you get it now, right? Because I didn't have it. Would it allow you to log into like your Coinbase, for example, and would it retroactively pull transactions, or does it start from like the day you log in?
No, it's actually retroactively. So they'll let you log into your account and you'll be able to do previous.
Cool, thank you.
No problem. Any other questions on the 1099K or like what you guys will receive, how to make it 8949? Okay, so we're just gonna go to the third question now. Will the cryptocurrency be taxed per transaction or a lump sum of all the transactions for capital loss / gain for the year? So again, this is the same thing that we spoke about in the beginning. It's not per, it's a combination of both, right? So like all your transactions of the year, all your gains of your transactions and all the losses of your transactions, they're gonna sum it up and see which one is higher, whether it's a loss or a gain. So it's a combination of both. And the last one, what is the best way to file for crypto tax for multiple exchanges? So my preferred method that I always talk to my clients about is, again, the coin tracking. Vakar had mentioned that he found something a little better than that. So I believe he's going to mention to us in the group, and I'll definitely check it out at that point as well. So now I'm going to open up the floor to any questions that anybody has.
I've got one. So, just kind of to question 3, they don't care if you bought something, you sold it for a profit, but then you used all the profit to buy something else, right? You're still paying taxes on the gains you made off that first transaction. Is that correct?
Correct, yes.
Okay. So it would be wise to, once you make some profit, just remember to keep some aside for taxes and then use the rest to purchase anything else that you want to buy.
Correct. Yes, that's it's a good point. Also, bringing to that point is that if you guys are making a lot of money on your day-to-day activities on the stock market or crypto, right? And let's say that you're making an extra 100K a year on this, you want to make sure that you guys are filing estimated taxes. Why is this important? If you do not file estimated taxes throughout the year and your income had substantially made a huge jump like that, you'll get a penalty at the end of the year. So when you guys ever do your tax return from now to April, and in 2020, if you made $100,000 more, they're going to try to assess a penalty on you, and you'll have to pay the penalty for not paying estimated taxes. If it's the first year, there's ways for your accountant to go and speak to them and let them waive that penalty. So just in case it happens to anybody, or you see that there's a penalty on your tax form, just always speak to your accountant and ask them to try to get that taken away. But there is a penalty. So if you do see a lot of gains throughout the year, you're not really seeing as many losses, make sure to speak to your accountant to start paying estimated taxes.
So I have two questions on that. Sorry.
Yeah.
Is there an amount that you recommend we start to think about estimated taxes? Like you said, $100,000 in gains, but is there like a smaller amount that you think we should start on? And the second part is, so estimated taxes, that's just every quarter or so going in and, like the name says, estimating what your gains are and paying your taxes ahead of time in preparation. Is that accurate?
Yes, that's exactly what's accurate. So like right now, like I'm assuming that majority of us are on our W-2 job, so our day-to-day jobs and stuff like that. So they already take out taxes from your paychecks. So that's considered like, okay, that's done with. But all these things that we're doing from crypto and the stock market, we're not paying any taxes up front. So they're saying that if you're making a lot of money, we want the cut from the beginning. Like we don't want to wait until April or whenever you guys do decide to file your tax returns. So yes, what they would expect you to do is do it on a quarterly basis, whether it's paying, well, depending on like what your tax rate is, and like if you're making $50,000 extra in crypto or stock exchange, you might want to pay a couple of $1,000s on a quarterly basis. Again, that also depends on what your personal tax rate is. That's something that you need to speak heavily with your accountant and keep like a lot of my clients that deal with crypto and stocks throughout the year, I am in touch with them on a quarterly basis to see how they're doing. Are they more in gains? Are they more gains than they were last year? What is their status? Because I want to make sure that none of my clients have to pay money where they don't need to pay, especially penalties. I see no point of that. So I keep track of all my clients that do these types of things, and I make sure I follow up with them throughout the year for them. And so it's just really good to be open with your accountant, let them know what you started doing or what you are doing, so that they can keep in touch with you throughout the year to see if there's any changes or tax scenarios that they can help you with, or even help you in a more beneficial way.
And then there's a reconciliation at the end. Is that correct? Where if you did overpay, they'll send it back to you, or if you underpaid, they'll tell you, okay, you underpaid by like, whatever. And
correct. So the way it works is that, like, let's say that you paid $5,000 in estimated taxes, but you were only at the end of the year supposed to be paying only $3,000 in all your crypto and stock market capital gains. Then what they'll do is that $2,000 will be added on to your tax refund.
Thank you.
No problem.
Awesome.
Yeah, just for the best practice for the day traders, what do you recommend? Like, should we keep depositing some amount every month to a checking account for the tax purposes, or should we wait end of the year and pay all the taxes by selling one of the stock?
So I believe that you guys should keep it separately from the beginning. A great way to assess it is this quarterly thing that I'm talking about. Maybe you might not want to do it on a month-to-month basis, but I'm sure everybody here knows exactly how many losses and gains that they do on a monthly basis. And if you guys don't, it's very, very important to start doing that, just for your sake of knowing where you are in the market and how well you're doing. So when you do that on a quarterly basis, let's say you made $10,000, you might want to take 20% of that $10,000 and just keep it in a checking account, right? Or you can just mail it straight to the IRS, whichever one's easier for you guys, as a quarterly taxes.
Awesome. So, I mean, like, it seems like everybody's scenario and situation is different, right? It's not something that, it's not like a blanket statement where it could cover everybody. You understand? So and it's totally understandable because, the IRS, that's how they are, and the tax, that's what they do. They make it hard for the normal person to do it themselves. But the thing is that if you have a reputable person who knows and understands these laws, right? We just want to make the informed decisions that, we just don't want to be like, okay, that's what this whole basic class is about, to make informed decisions on your assets, right? And obviously, your accountant should know the law and everything like that. But, that's the ultimate goal, is to make informed decisions for the community and what's in the best interest for you and your family, So hopefully, I thought this was great, informative, way too much information in like a short amount of time. I'm just like, whoa, mind blown. But is there any
Definitely
other
go
questions?
in depth with it with anybody if you guys want to message me or give me a call or whatever it is. I know there was a lot of information, but I do believe that a lot of the things that we spoke about is very important to make informed decisions on a day-to-day basis when you're doing your stock trading. So, but yes, I do understand for somebody that's not really in the tax field or accounting field, it is a lot of information to take in.
Awesome. Really appreciate it. If there's any more other questions, just go ahead and unmute your mic. And if
there's
more
no more questions, I do have one more thing I want to share with you guys, but I just want to make sure there's no more questions first.
Okay,
So,
cool.
Anybody have any questions?
No, I think we're good.
Okay. So now I just want to go back really quickly all the way to the beginning. These 2020 tax brackets. Anybody, whether you're a single file, head of household, or married filers, right, that is above the 24%, from 24 to 37%, I would strongly encourage you to contact me on the side. There is ways that we can get that tax rate for your capital gains lower. Obviously, just optimizing the laws. I'm a big believer on not like doing anything shady, but definitely just optimizing the laws. It does cost money in the sense of like, you might have to be making an LLC or something of that sort, or a corporation. But I would love to discuss it more in details, especially the ones that are doing heavy stocks on a day-to-day basis with a lump sum of money, and you do fall into this bracket, there is an advantage where you can be saving potentially a lot of percentage throughout the year. So if anybody does fall into that group, please go ahead and message me. I do also want to let you guys know that these tax brackets, and as well as the long-term brackets that I was showing you earlier, these long-term tax rates, all of this had changed when Trump came into office about 2-3 years ago. He did a tax and job cut act, where basically all of our long-term tax rates for capital gains went lower, as well as just ordinary tax rates also went lower, and business tax rates were lower. You might see changes coming up with this whole new Biden administration, where these tax rates, like before Trump had changed them, long-term tax rates were pretty heavily the same as ordinary tax rates. So you guys might see that change again. So if anything like that does pop up, or if I read about it in the news or see that it's coming out, I'll definitely let you guys know ahead of time so that you guys are aware of what is happening with our tax rates. And to end off, again, I do own a business, Think Tax, and anybody that was part of the seminar, I'd like to offer you guys $50 off of all 2020 tax returns that have to do with capital gains. This also includes a consultation about future years, whether it's estimated taxes, your crypto, whatever it is. I will go in depth with everything. If you guys have any other questions or concerns, you guys can always either give me a call or send me an email.
Thank you.
Thank you, Atithi.
Thank you very much.
Cheers.
Appreciate it.
Anytime, guys.
Thank you very much, Atithi. It was a great presentation, right? Lots of information. Hopefully, these guys digested it and got some information out of it. And Think Tax, and if you have any questions, you can always, if you're in the group, I know you're in the group, you could just just PM her on the side. I'm sure she'll be able to answer some questions if you have on a one-to-one basis if you need to, And I hope you guys got something out of this. And I really appreciate you, Atithi, for coming out on Valentine's Day. I'm sure, you know, you have some plans, but, you know, thank you. Thank you for coming out and educating us today.
Of
Really
course,
appreciate
anytime, Vicar. Thank you guys.
it. Not a problem. Thank you. Yeah.
Be safe, everyone.
Anyone, any other questions?
Yo,
we-
Walker.
Yeah. Zamal,
I
what's up,
just-
buddy?
Yeah, I just got it, man. Like 5 minutes. I got the last part, so I'm sure you're recording it, right?
Yeah, yeah.
Oh yeah,
Hopefully,
I see
yeah,
you
yeah.
recording. Yeah,
Yeah, I'm recording it. All right.
yeah.
All right.
It
Sounds
totally
good.
slipped me, man. For some reason, I wasn't active and I was just chilling. So
Awesome. Awesome. Yeah. So this should be up. I should have it probably recorded and online by
Mhm.
tomorrow, hopefully.
yeah.
All right.
Still have plenty of time, man.
Awesome. Great.
All right, cool. Sounds good.
Thanks, everyone.
Thank you.
All right,
Thank you so
take
much.
care. Thank you. Atithi, thank you very much for your presentation and time. Right? Really appreciate it.
No problem.
Take care.